Have you ever noticed how your paycheck disappears and you don't even remember spending it? You get paid on Friday, you tell yourself this is the month you'll finally save more, maybe invest, maybe build something for your future, and then suddenly it's the 28th, your bank account is lower than you expected, and you're back to waiting for the next paycheck to reset everything. And the worst part, it's not that you're lazy, it's not that you're bad with money, it's that the system most people live in is designed so that if you stop working, the money stops too. My name is Bruce, and I spend way too much time thinking about how people can stop trading their time directly for money. If you're someone who feels like you're stuck in a paycheck-to-paycheck cycle, even if you earn a decent income, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because today I want to talk about passive income, not the fake version, not the buy my course and you'll make $10,000 a week while sleeping version. I mean passive income ideas that actually work in the real world. And here's the thing, most people completely misunderstand what passive income is. They think passive income means zero work. It doesn't. Passive income means doing the work once and getting paid repeatedly. Active income is like carrying buckets of water from a well every single day. Passive income is like building a pipe. The pipe takes effort to build, but once it's there, the water keeps flowing. And this matters more than people realize. Because according to multiple global financial studies, the majority of millionaires have more than one income stream. Not because they're smarter, but because they stopped relying on just one pipe. So let's talk about the passive income ideas that actually work, and the math behind why they work. Not theory, reality. Passive income idea. Number 1. Dividend-paying investments. Look, I know investing sounds intimidating, but this is one of the most reliable passive income systems ever created. Here's how it works. Some companies share their profits with investors. These payments are called dividends. So instead of just hoping the stock price goes up, you're literally getting paid just for owning it. Let's do simple math. Let's say you invest $5,000 into dividend-paying assets that average a 4% annual yield. That's $200 per year. Which doesn't sound life-changing, but here's what most people don't realize. If you invest $300 per month consistently for 10 years and reach around $36,000 invested at that same 4% yield, that's $1,440 per year, or $120 per month. That's your internet bill, paid forever. And if you keep going for 20 years, that number could easily reach $300, $500, even $1,000 per month. Not because you worked more hours, because you built the pipe. Now you might be thinking, Bruce, I don't have extra money to invest. And that's a fair objection, but the average person spends hundreds per month on things that don't build any future income. Subscriptions, impulse purchases, lifestyle inflation. It's not about having a lot. It's about redirecting small amounts consistently. Because time matters more than size, compounding rewards, consistency more than intensity. Passive income. Idea number 2, digital assets. This is where I get really interesting, because digital assets are one of the few passive income opportunities that don't require large starting capital. They require leverage, a YouTube video, an ebook, a digital template, a course, a piece of software. These are assets you create once that can sell thousands of times. Think about it like this. If you work 1 hour at a job and earn $10, you get paid once. If you spend 10 hours creating something that sells for $10 and it sells 1,000 times, that same effort becomes $10,000. Not because you worked 1,000 times harder, because you worked once and built something scalable. This is the difference between linear income and scalable income. And psychologically, this is difficult for people, because our brains are wired to expect immediate rewards. You work arrow, you get paid. You rest arrow, you get nothing. Passive income reverses that pattern. You work now arrow, you get paid later, which feels uncomfortable because there's delayed gratification. But delayed gratification is one of the strongest predictors of long-term financial success. It's the ability to do work today that your future self benefits from. Passive income. Idea number 3, high-yield savings and cash interest. This sounds boring because it is boring. But it works. If you keep $10,000 in a basic account earning almost nothing, you earn almost nothing. But at 4% interest, that same $10,000 earns $400 per year. No extra effort. And as your savings grow, so does the income. $50,000 earns $2,000 per year. Again, not life-changing instantly. But this is the foundation. Passive income is rarely explosive at first. It's gradual, and gradual becomes powerful, because eventually, your money starts contributing to your life instead of just sitting there. Passive income idea number 4, owning pieces of businesses. Most people think you have to start a business to benefit from business income. You don't. You can own pieces of businesses, public companies, small digital businesses, online storefronts, even simple things like print-on-demand stores. The key idea isn't complexity, it's ownership. Employees get paid once, owners get paid repeatedly. And here's the psychological trap most people fall into. They optimize for comfort instead of leverage. Comfort is predictable. Leverage is uncertain at first, but powerful long term, which is why most people stay in systems that require constant effort, even when alternatives exist. Passive income. Idea number 5. Skills that turn into systems. This one is overlooked. Your skills can become passive income. For example, if you learn design, you can sell templates. If you learn photography, you can sell stock photos. If you learn writing, you can publish digital books. If you learn coding, you can build tools. The key is turning skills into assets instead of only services. Services pay once. Assets pay repeatedly. This is one of the biggest mindset shifts that separates people who stay stuck financially and people who build long-term income. They stop asking, how can I get paid today? And start asking, how can I get paid repeatedly for something I build once? Even small systems matter, because small passive income streams stack. $50 per month, plus $100 per month, plus $200 per month, eventually becomes $500, then $1,000. And at that point, something changes psychologically, because you realize your survival is no longer tied entirely to your next paycheck, and that reduces financial stress more than people expect, because stress doesn't come from working. Stress comes from dependence. When you depend entirely on one income source, uncertainty feels dangerous. Multiple income streams create stability, even if each stream is small. Now let me tell you a quick story. A few years ago, someone started investing just $200 per month. Nothing extreme, no risky strategies, just consistency. At first, nothing happened. After 1 year, the income generated was barely noticeable, maybe enough to buy a meal. But after several years, the income covered small bills, then larger bills. Eventually, the income itself started buying more investments. And this is where the system becomes self-sustaining, because the assets start building more assets. This is the moment passive income becomes real, not when it replaces your job immediately, but when it starts reducing your dependence gradually. And here's what most people don't realize. Passive income is less about making money fast and more about making money inevitable. Because once systems exist, they continue working even when your motivation fluctuates, even when life gets busy, even when you're tired. That's the real power, not speed, stability. So here's what you can do starting this week. Step 1. Open a dedicated account for investing or saving income-producing assets. Even if you start with $10, the habit matters more than the amount. Step 2. Automate contributions. Automation removes the need for constant motivation. Motivation fades. Systems don't. Step 3. Choose one scalable asset to build. A digital product, an investment portfolio, a small online asset. Focus on one pipe first, not 10 at once. Step 4. Reinvest income instead of spending it immediately. This accelerates compounding dramatically. Step 5. Be patient. Because passive income is front-loaded effort and back-loaded reward, which is why most people quit too early. They expect immediate results from systems designed to grow slowly, but the people who stay consistent benefit disproportionately, because eventually the math works in their favor. Your money earns money, your assets earn income, your systems support you, and over time the balance shifts, from working for money to money working for you. And that shift changes everything, because financial freedom isn't about never working. It's about having the option. If this video helped you see passive income differently, hit subscribe, because I make videos about how money actually works, not how people wish it worked. And remember, every dollar you build into a system today is a dollar that doesn't require your time tomorrow.